ask one last question to each of the panelists, and just to see where you stand. It's sort of like a 30-second answer. So is open banking revolutionizing the lending landscape, especially around sort of more the financial inclusion element to it? Shiraz, I'll start with you first.
It can, and I think it will, but it's not a it's not a quick solution. And I'll make the point that I made earlier, so I will sound like a broken record, which is that it's not a magical answer, but it should be used to supplement information that's already available.
And Diane?
I'm going to sound like a broken record as well, but please get the structure of the data right, and I think it absolutely can be. But I think as well, linking it with things like emerging payment technology as well, so request to pay and being able to do push payments will help with not only the kind of underwriting process, but actually managing the ongoing life cycle of lending and payment technology. So I think making sure that we can link up with things like request to pay and new technology that's coming out is really going to revolutionize things, I think.
And Tim?
So my answer is it is changing the face of affordable lending in the UK. We've taken a brave step in some respects. We've democratized our data. We've given that to the University of Edinburgh. We are going to produce a report on what we see within the data and what the data has done in terms of our credit, risk decisioning, lending, but also reporting on all of the credit malpractice, which we believe is there. And I think I've touched on some of it today. So we want our open banking data elements to be used for greater research within the UK to assist people at the affordable lending level.
And Farhan?
I mean, I'd say it already is. I mean, I think it's, kind of at that cusp of tipping over into really influencing it and really disrupting it. But when I look at kind of the competition from an open up challenge perspective, I think all of these companies would have taken several years later, right, to implement and have kind of that kind of impact, whether it is from an affordability to a salary, to a savings, to a mortgage, right? If you think about all of those, right, all of those kind of groups, whether it's people right at the edge or people who are trying to kind of stay on that treadmill and move up different kind of spectrums, I think they're all benefiting, from these kind of companies and from these innovations that open banking is allowing, kind of for customers and for startups and for, some of the larger companies to really kind of take advantage of. And I think it's off the back of a lot of infrastructure that's already happened when I think of companies like TrueLayer. And I think it is from companies at the edge that are trying to be even more innovative, like Wallet or Flux or Wagestream or Mojo or any of these companies that are really helping to kind of plug some gaps here.
Excellent. And Gareth, you have the last word.
So the revolution started, I suppose. I mean, people like Tim have been able to come to the market and many others. It absolutely isn't over. There are many more possibilities still to be explored, but also some problems potentially. If we categorize the data to a certain level of detail, it gives you the opportunity to discriminate like crazy and not lend to people who go to the pub 5 times a month if you determine that's a risk. What types of behavior will you as a lender determine to be in appetite and outside of appetite? The same mistakes that maybe the mainstream lenders might be accused to have made by relying overly on CRA data may now be replicated by relying on what you think you see in the current account transaction data. So be careful, your prejudices might come out. But also
wait until we see the report from Edinburgh, Gareth, because I think that's not true.
Mate, I'm a believer.
You're extolling the myth of credit scores.
Okay.
Mate, I'm a believer, and you're eating into my time. So watch out for the problems. And with the rush to market, it's great that there's an acceleration, new people coming to the market. My hope would also be that those companies are robust enough to work in the increasingly regulated environment, particularly with the follow-up support that some vulnerable customers need when lending goes wrong.